Now, so let's go ahead and do this. So what we've done here now is, over here we had journalized. Now don't forget, when we had journalized in the accounting cycle, we paired the debit with its corresponding credit, and we tied it into the source document. That's called journalizing. So let's get into journalizing right now. So here's what we're talking about when we talk about a journal. And it's the, so let's see, actually, let me make sure that thing's up and running. So in this case, yep, it's up and running. So as far as journalizing goes, what we have here, by the way, you guys that came in late, did you verify you have page 398 to 414 in your textbook? A couple textbooks that were missing. I bet you have it, but a couple were missing. So here we have the journal. And the journal is what's called the Book of Original Entry. Okay. And so here's what the form looks like. On the left side, you have the date. That's that column. Then you have a middle column called description. Then you have a debit column. And you have a credit column. Okay. Now, by the way, in here is a posting reference column, and we'll bring that up later. But there is a posting reference column in here, but let's deal with it later. I'll take it out. Okay? So what happens here now is the year and the month go at the top of each page. So this was in 2011. And the transaction occurred in December 1. Okay? Now, I'm going to move that over just a little bit so you see that it's December, so that's December 1. Now, what happened is this person started their business by investing $30,000 in cash. So what you do, what are you going to do? You're going to debit cash for $30,000, right? And credit the capital account for $30,000, right? So, under the description column, you write the account. All the way to the left is the account that gets debited. Cash, 30,000 goes in the debit column. Then the credit account goes next. It'll be like TJ Capital. And 30,000 goes under the credit column. And then you tie it in with an explanation, and owner invests in business. Okay? So, here's the way this works is, the debit account name goes all the way to the left. Okay? And of course in the left column. Indent half an inch, write the credit account name, PJ Capital, okay? And then, the way this book does it is halfway in between, you put the explanation. Now the explanations in here are really pointless, but they just want you to remind you, be sure to do an explanation. On the job, this explanation needs to tie it in with the source document. So you may put check 231, and this will tie it back to that specific check that the owner wrote. Okay? So in here, this is all you need to write. On the job, tied in with the source document. And so later on, we'll post this from the journal to the ledger, and you can trace a number all the way through the system, the ledger, back to the journal, back to the source document. Okay? So you get audited, you can wave a piece of paper. Okay? All right, does that sound good? So what we're doing here, so let me kind of go over this. Now, let's say then, on the second, they bought supplies with cash. So there's no need to repeat the year or the month unless it changes part of the way through a page. The top of every page now is the year and the month, right? But all you need is the day unless the year or the month change. So if they buy supplies with cash, what'll be debited?
Supplies.
Supplies, exactly. So supplies is the account that will be debited. And in this case, it's for $2,500, so you put that in the debit column. All right, if supplies is the debit, what's the credit? Cash, so you indent half an inch, write the credit account, put that into the credit column, and then bought supplies. Okay, that's what it'll say in the book. You, on the real job, you need something ties into the source document from Staples. Okay, and so with Staples and the date, you can probably trace it back. Okay, but be sure to put in something that'll do that. Does that sound good? This is journalizing. All right. By the way, now that we have everybody here, let me do one more piece of business. WSU, now about a third of our students go to WSU-B, okay, 33%, okay, exactly. They invited us up, they'd like to invite us up for a pizza party. And again, it'd be a chance to see the campus, kind of get introduced and learn where it's at, okay? So, they had 2 dates available, and they wondered which would work out the better. They're both Friday. They're from 4 to 6. Would October 25th work better than November 1? Anybody got a strong preference for either, or does it matter? 25th works better? 24th works better for you guys?
Yeah.
All right, so I'll tell them we want it the 25th.
Day after Halloween will be rough.
Oh, be rough, okay.
Yeah.
So I'll tell them the 25th. Now, I'm not sure, we'll just see how it goes, okay. And again, they just want to introduce you to the campus, and a third of our students do go there. 2/3 go someplace else, okay? But if you want an introduction, we'll line it up for you. It's a pizza party, it'll be free pizza. And before you make your decision, so I find out where they get the pizza. No, really, maybe it's bad pizza, you know? All right, you never know.
Very true.
Yeah, tell them that only on one condition, you don't buy it from here and you do buy it from there, or whatever. All right, we can do that.
Just to see the campus, you have pizza, that's it.
That's it, yep, just kind of introduce you to the campus, you know. Because so many of you guys have never been there.
Yeah, I'm going for, so I've never been up there yet.
And for my purpose, it seems to me it's really good motivation if you guys have a concrete goal. Here's where it is, okay? Yeah.
Another suggestion, maybe after the pizza party, we all get together for drinks and studying. You know,
I don't know how well
just saying.
I get it, yeah. No, but you guys, I'm not endorsing that, no drinks. Yeah, I did not endorse that. Nothing to, you know, you can't. No, I did not endorse that. All right, hey, you guys doing good? All right, so listen, what this will do now is this will move us one step along and we'll practice our debits and credits. So, let's do this. Let me pull this down. Now, how are we doing? So, I always want to do a wrap up. So let's do some practice. And again, we'll practice what we've been learning. So, your homework is problem 2-1A. So let's practice with 2-1B. Okay? Now I'm going to turn out the light so that's easier to read. And why don't I do the first one? And you guys, so it's 2-1B, and you find that on page 85. Is that right? Okay. And you got, okay, so it's problem 2-1B. You find that on page 85. Okay? So let me get out the. And again, this will kind of get you lined up to do your homework. Okay. So the way this reads now is, well, here's a copy of a ledger. Yeah.
You want us to do it on paper?
Yeah, just do it on a regular sheet of paper, because, yeah. So this is what it will look like when you print the working papers. Here's the date column, account titles and explanation, description is another name for that, posting reference. We won't do anything with this now. Here's your debit column and your credit column. So why don't I do the first one, and then we'll let you guys, we'll get back to doing some practice. So the first one says, Kitty Shaw, the owner, invested $30,000 cash along with $15,000 of office equipment in the company. So, and that happened on November 1st, and of all things, they don't give you the year. Well, I'll put in here, and the year, I'm just putting in this year for illustration, right? And you won't find it anywhere, I'm just kind of making it up, okay? And they have they have November 1st, okay? So November goes in here, number 1 goes in here. So, I'm going to put the debit accounts first. So in this case, it'll be cash. Just a second, let me do this. Okay, so in this case, we're going to debit cash, so I'm going to write cash here. And I'm going to put 30,000 in the debit column. Okay? There's another debit account, office equipment. Okay, and that's for 15,000. Now, where am I getting these account names? Where I'm getting them is if you look down here, they give you what's called a chart of accounts, which is the index to the ledger. And I can use only these accounts. So here's cash, here's office equipment, and then when it comes to the capital account, here's the name I use, K Shaw Capital. So I indent ½ inch and I write K Shaw, comma capital. And this person has $45,000 worth of equity in the business. $30,000 in cash, $15,000 in equipment. Okay? And then comes the explanation. Owner invested.
Is that still indented to half in cash?
It's actually between the two, is how this textbook does it. Now, I think what you're referring to is, most of the time, this is in ½ inch and then another ½ inch, is most of the time how it's done. This particular textbook kind of does it in between. And it's just the way these guys do it. But often you'll see ½ inch and ½ inch, okay, in business. Okay, does that sound good? All right. Do you guys want to do the second one? The company prepaid $4,500 cash for 6 months rent for an office. And of course, they give you a hint, use prepaid rent. Okay? So, put the date, let me do this one just as a, so the date goes in here, the asset account is prepaid rent. Okay, and that's $4,500. Indent ½ inch, right, cash gets credited, $4,500. And halfway through, prepaid, 6 months rent. Okay, let me put up the printed copy and put up the printed copy. And then if you guys want to do the next one, give me feedback as you go along, and just regular paper, and this will also kind of get you started in your homework. And by the way, guys, don't forget, this is what a compound entry looks like using debits and credits. This is a compound entry. We had a compound entry last week. Okay, this is also a compound entry.
Can you pull the sheet down on the left side?
I'm sorry, oh, sure. By the way, yeah, and by the way, it's a lot easier if you have your book in front of you. In fact, this guy next to you, would you mind putting the book on the other side of you and work together? You okay with that? Yeah. But I didn't mean to volunteer. I said, well, I did, I suppose. And I'll just go ahead and put up the rest of these. Okay. And then here's the next one. It's also a compound entry.
This comes in a couple of chapters.
And then why don't you guys go ahead and just keep working? Well, first of all, any questions on this? Is this making sense? And accounting isn't necessarily difficult, but it is practice, 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 practice.
Just purchase.
Who is this on account? So what it says, let me show you here. So what it's saying is for number 4. Now, by the way, it takes a while to kind of get used to the lingo. But what it says here is the office supplies and their credit purchases. So when it says credit purchases, that'll be an accounts payable. It'll be when it says credit purchases, it'll be a liability of some kind. Now, in this case, if you go down here, there's only one liability account. It has to be this one. Because there's only one of them. Exactly. And it's the credit purchases. So they were all on credit, right? And on credit means a liability.
PR is just an account number?
Well, it is an account number, yeah, but I'll show you in a minute. What it is up here, when you post from the journal, when you post from the journal to ledger, that account number tells you what journal account it was posted to. So in the journal, it will tell you where it was posted to. So for instance, this top one, this is posted to account 101. And that's be the account number in the ledger.
Is that necessary? I've never done that before.
It is necessary, because what it'll do now is when you go to the ledger, it has a page number of the journal.
Yeah.
So it's a cross-referencing system. So what that says is, what it enables you to do is trace a number all the way through the system, back to the source document. So you get audited, you can trace the number all the way back to the source document. Because ledger, journal, source document. All right, let me put up another answer here. No, the only thing you can use is what you got right here. So this is 2 This all only needs to come over here. Oh, I see what you, by the okay, so I hear you. Yeah, on the explanation. Yeah, you're on the explanation, exactly. I got you. Because often, in many cases, in this case, the word description is the account payment. But yeah, explanation, you can send it on. Okay. The company completed a project for a client who must pay within 30 days. So they complete the service, send bills, or wait for the money. So that'll be the credit. It'll be a receivable. Well, it'll probably be, actually, and you're pretty close, it'll probably be accounts receivable. So what they will do is, they complete the job, send the bill, and they wait for their money. So debit accounts receivable, credit the revenue account. So in this case, it is accounts receivable, and then you credit service revenue.
Well,
How you doing here? Pretty well, you got a question?
yeah.
Oh, you doing good?
Oh, that's it. Oh, so.
All right. How you guys doing? All right.
Oh.
We'll give you a minute, see what questions there are, and then let's have a review. And I think the review really works. I think it moves into the long-term memory. So a recap in a minute. Yeah,
I don't know, like which one comes first, like cash comes first or?
whatever the debit is. What the account that gets debited will be the first one. And the credits go second. And if there's two debits, both of them go first. Yeah. You guys doing good? How you doing? Are you doing good? All right, good. You got a question?
So when it's a partial payment for
Yeah.
services, does it go under services revenue or does it go under,
Now, which one, is there one up here you're referring to, or?
it's one from the 22nd?
All right, well, let's take a look here from the 22nd. So here's what the 22nd says, is the company received 50 as a partial payment for the work completed. Yeah, so what it is back on November 12th, it was an accounts receivable, right? So the customer owes them 10,000, or the customer owes them 10,200, right? So what you do with this is you'll debit cash for the money received and you credit accounts receivable.
Okay, I
Yeah.
just wasn't sure.
Now, as far as the partial payment goes, what that means is what's left will be a balance in the accounts receivable. You guys, I'm gonna ask you to stop there, and let's go ahead and have a review. Sound like a plan? Okay? All right. So, let's do this. Let's do this to make that readable. All right. What's an accounting cycle?
Business transaction.
It's a series of transactions that occur every accounting period, right? What starts it? A business transaction. What's a business transaction?
What's the difference in the equation of calculus?
Yeah, it's a transaction that creates a change in the accounting equation, all right? What does it produce? Source document. What's a source document? Written proof of a business transaction. So then what's the first thing you do with that, after that? Journalize it. What's the purpose of a journal? You paired it, exactly, I heard that. You paired the debit with a corresponding credit and an explanation. An explanation should involve some sort of a reference to a source document, okay? Then, what do you do next? You post to the ledger. And the ledger is what? It's a list of all the accounts. Okay, and that's what we'll do on Thursday. And an account, it's a record of an increase and decrease in a specific asset, liability, or owner equity account, right? Okay? Then, you want to check the accuracy of your accounting. How do you do that? Trial balance. And what does the trial balance do? It verifies the debits equal to credits. And it's much more powerful than you think. Okay? Then after you do the trial balance, what's next? Financial statements, sure, and then you make a decision from there. All right? So, what are some asset accounts? Land, building, equipment, sure. Why are land and building two separate accounts? When you buy the land and it comes building? Exactly. They're in two different depreciation schedules. Right. So supplies in here, you're going to call an asset, but when it's used up, then it'll convert it to an expense. On the job, obviously just expense. Okay? What's the difference between accounts receivable and a notes receivable?
One's long-term.
Yeah, one's short-term, one's long-term, yeah, it's a good way of wording it. Of course, a notes receivable is also an unconditional promise to pay.
Contractual then, essentially, right? Notes receivable turns contractual.
It's more the idea that the note receivable is just the unconditional promise to pay, so it's easy for you to collect. Is more the idea. It's just harder for anybody to get out of. Okay. What is the example of some? So if we again we have accounts payable and notes payable. That's the same sort of thing. What's unearned revenue?
Revenue that's paid for but not completed. Or
All right,
services
sure. It's
paid for but
revenue
not
you earn
completed.
and you receive in advance. So you receive the cash and then you'll earn it. So you receive the cash, then you earn it. Okay. And what kind of an account is it? Liability, yeah. So if you receive a down payment, an early payment, a prepayment, like when the publisher receives the subscription, that's a liability, okay? All right. What's an accrued liability? Like taxes, sure. So the taxes accrue, and then you'll pay them at some future date. Exactly right, okay? All right. What do we call the left-hand side of the piece of the T? Left-hand side. All right. What do you do with the? Did I use my right hand? No, anyway. What do we call the right side?
Credit.
Credit. What else does it mean? Nothing. Okay. And is credit good and debit bad? No. Just right and left, right? Nothing more? Okay. All right. Okay. So assets. Do they increase the debit or credit? No, increase in debit or credit? Debit, right? Now liabilities, do they increase with the debit or credit?
Credit.
Credit, right? Owner's equity, increase with the debit or credit?
Credit.
Okay, now, withdrawals, the account will always be a debit because the effect is to decrease owner's equity. Revenue will always be a credit because it increases owner's equity. Expenses will always be a debit because they decrease owner's equity. All right? Okay. What's the normal balance? Whatever side increases it. Okay? Can you have a not normal balance?
Yes.
Is
Yes, but it's
that
not
good?
No.
No. Normally it's bad. I always got to say normally because it's bad, but there's got to be some, accounting's so complicated, there really's got to be some exception someplace. Okay? All right. So when you journalize, what's the left column? The date. Yeah, what goes to the very top of every page?
Year.
And month. Okay, after that, unless it changes, you only write the date. So, got a transaction. What goes first, debit or credit? Debit. The debit account goes first. Indent half an inch and write the credit, and then after that goes
The explanation.
Right. Man. All right. And double entry. What does double entry in this case mean?
Always a debit.
Always be a debit and a credit. And the debits will always equal the,
Credits.
and if you have more than one debit or more than one credit, what do we call that?
Compound.
Compound entry. All the debits will go first and then all the credits will go second. Man, sure took us longer to go through it the first time, didn't it? Did we just breeze through that? All right, are there any, and you guys, nice job. Do you realize how much we went through today?
Yeah.
And I think you did. Seriously. So nice job, you guys. Keep up the work. Seriously. And any questions and anything? All right. Well, listen, we'll see you on Thursday then.
No. I'm really glad that
I'm going to turn off the camera before somebody says something.